Still Trisha. Um, so we're gonna do welcome. We'll introduce each other, and then we're gonna talk about how to know when your sick leave is running out, and what your options are when your sick leave is running out or when it's about to. And then Tom Rasmussen is here, and he's gonna talk about if you're converting ETF's life insurance to pay for your health insurance or your long-term care insurance. And then a majority of our time will be through questions. We've already gotten a couple questions in advance. We think that you have such unique questions and everything about this that we'll learn the most doing that. So we'll definitely leave a lot of time for questions. So again, you've met me, you met Tom, Arlene Larson, who is our federal health programs and policy manager, who is the godmother, if you will, of life insurance. Unfortunately, Arlene, our Medicare, sorry, she's the master of all. But Arlene is retiring, as is Tom, this year. And a special note, today is Arlene's birthday. So, so Louise bought her Chipotle for lunch. So happy birthday. And then Steve Norris is an outreach and benefits specialist at ETF. When you are getting ready to retire, that's who you meet with. Steve, he travels around the state and talks to people about life or about everything that we do when you have to retire. And he knows a lot about what to do with your sick leave. So let's get into it. How do you know if your sick leave is running out? Well, you get a yearly statement of benefits. I happen to bring mine. You've probably gotten this since you're an active employee. Usually comes out April. Soon, good news, soon those will be electronically available to you as well. But that tells you how much sick leave you have left and all your benefits. It comes every April. And then also, when you have sick leave and you're using it, 3 months before your sick leave runs out, you'll get a letter from ETF that says, hey, your sick leave is going to run out. These are your options. And your options are you can have the premiums deducted from your monthly annuity payment. So to come out of your retirement fund, and it would pay the premiums directly to your health insurer, dean, courts, whoever you have. You can have the health plan bill you monthly, the premium, so you would pay them directly, and then you would have your insurance still through ETF, just that you're paying for it directly. If your spouse has sick leave, you can then change your coverage from being under you as the subscriber to your spouse. So you both worked for the state, so you both had sick leave. You've escrowed your spouse's sick leave, and you've been using yours. Now yours is running out. You can shift it over to your spouse and use their sick leave. Or you can cancel your health insurance coverage through ETF, and you can do that at any time throughout the year. And we'll talk about some of the consequences with that. So what do you need to do if you want to keep your state insurance? You can do nothing. And what we'll do then is we'll automatically deduct it from your annuity payment if you have enough there. As you can probably know, premiums are pretty high. Not everybody's annuity is large enough to cover that. Or the premium will be billed to you by the health plan. So if you do nothing, those are the things that will happen. But you need to remember that premiums are deducted 1 month in advance. So your August premium is deducted from your July premium, your July annuity. So that's always something that throws people off. So we want to make sure that you know that. But you can also cancel your health insurance through us. If you cancel your coverage, it's called a voluntary cancellation. You don't lose eligibility. You can still come back to us during open enrollment at any time. You're always a member. You're leaving us. That's fine. Other insurance, but if you're going out to the marketplace to get insurance or going somewhere in the private sector, you're not always able to enroll in the middle of the year for that insurance. Sometimes you're only able to enroll during open enrollment. So you need to make sure that if your sick leave runs out in June, you're going to be out, you're thinking, I'll go out to the market. You're not always going to be able to enroll. So you want to make sure that you do that homework beforehand to know if you can enroll mid-year. If not, you won't be able to enroll until open enrollment for coverage that would then start January 1st. So then you're 6 months without health insurance. If you want, and you can, another thing we tell members too is know that, because if you want to disenroll from state health insurance to enroll in something else, so then you have that mid-year coverage, maybe you disenroll during open enrollment in 2026. You know that your health insurance is going to run out February 2nd of 2027. So you know that you disenroll during open enrollment from our insurance as of January 1st. You enroll in some other health insurance during open enrollment. You still have 2 months of sick leave. You can just escrow that. It'll be there in case you want to come back to use at some other point, but then you're not hanging out there without health insurance. Or some people with their coverage runs out June, they'll just pay out of their pocket or they're out of their annuity for the 6 months and then disenroll during open enrollment for January 1st. And then that way, then they're paying out of their pocket and they go out into the marketplace and they get something and then they're out of our coverage as of the January 1st. But then you're not sitting there without health insurance. So now Tom Rasmussen is going to talk to you about what to do with your life insurance to help pay for your health insurance or long-term care.
The binder won't work. Good afternoon, everybody. So Tricia introduced me already. My name is Tom Rasmussen. I'm the Life Insurance and Dental Insurance Program Manager at ETF. And I'm going to talk to you about how to convert your life insurance, or talk to you a little bit about converting your life insurance to pay for your health premiums or long-term care premiums. There we go. So a little bit about the agenda or the outline. I'm going to talk a little bit about general information, what it is, how does it work, what the eligibility requirements are, what the amount of money or monies available through the conversion process is, things that you should consider before you act upon doing this or not, pros, cons, things like that, how to convert if you wanted to go through that process, and then the administration of how that works if you sign up and do it. So general information, not everybody is eligible. I'm guessing that most people in this room and online are probably eligible to convert your basic life insurance group coverage. And this is the life insurance through ETF. I know UW has their own life insurance policy. I'm not responsible or not, I don't manage that plan, so I don't know those rules. This is only applies to the ETF life insurance policy that you have as a retiree. So as part of the provisions of that policy, you can pay for your health insurance or your long-term care insurance if you have that through ETF. It's governed under State Statute 40.72 and Wisconsin Admin Code 6060. And I have some brochures up here at the end if you're interested, but most of the information that I'm going to be covering today comes directly out of that brochure, it's brochure number 2325. If you want a copy, and I think I brought like 30 today, so maybe not enough, you can always contact ETF and ask for that to be mailed out to you, or you can access that online. So the one thing I do want to make clear that this is not the same as living benefits. Living benefits is if you're diagnosed with a terminal condition, you can access your death benefit of the life insurance early. This is separate from that. So how does it work? As an active employee, you guys paid premiums through life insurance if you enrolled in life insurance. Once you retired, up through age 65, you'd continue to pay for those premiums. But at age 65, those premiums would have ceased, and you have basic life insurance at the reduced amount at age 65, and that will continue for life. After age 65, as I mentioned, your benefit reduces by 50% of what your basic coverage is. And basic coverage is based on your highest annual earnings when you're an active employee. So for example, if you made $50,000 as your highest annual earning 1 year, your basic reduced coverage amount would be $25,000. That money, when you paid premiums, that money is reserved by in an account, and it's called the reserve account for retirees. And what that account does is pays for all of our benefits, death benefits when you're a retiree. So there's an active reserve for actives and one for retirees. So the benefits or the premiums that you paid as an active employee go towards your benefit as a retiree. And that is the money that securing would pay your conversion through if you elected to do that. The conversion amount is always going to be less than what the face value is. So that $25,000 that I mentioned earlier, the conversion amount is a little bit less. So the conversion, there's a complicated formula. It's based on your average life expectancy, how old you are now, and how much money is in that reserve to pay your face value. So it's not a one-to-one, it's not a one-to-one equation. And let's see, if you do convert, Securian is who our life insurance vendor is and has been for 60 plus years. They will pay your monthly health or long-term care premium until your account or the money in your account is used up. So eligibility, you must be insured under the group life insurance program, and you must be the subscriber. So if you're listed as a dependent, that doesn't, you're not eligible. You have to be the subscriber through the ETF plan. Your basic life insurance coverage must already be at its reduced final amount. And again, I would guess the great majority, if not everyone in this room, that is where you're at. It means you have to be at least 66 and a state retiree. If you're age 70 and still actively working, you are eligible to keep your life insurance as active. And all retirees must first use the accumulated sick leave credit before drawing on the life insurance to pay for premiums. And there's a caveat to that. That's not a requirement to pay for long-term care premiums. But the majority, people who take advantage of this usually pay their health insurance premiums and not so much long-term care. Is the great majority of people who do this program have their health insurance premiums covered. So how much is available? If you do choose to convert, as I mentioned, you'll be credited with the conversion value of your basic life insurance. That's the present value, again, not the one-to-one value. And that's calculated by, I have notes here, is the amount that must be invested today to pay for the face value of the insurance upon your death. You must convert all of your life insurance, so you can't choose to convert a portion of that. It has to be the full amount. There's no cash value to that, so it's not, you don't receive the cash. It remains in this reserve account that I mentioned earlier, and Securian will pay those monthly premiums to your health insurance carrier or your long-term care carrier. And it's not subject to income tax, and therefore the monies can never be paid directly to you, and then you pay your health insurance. Again, that interaction and transaction will be between Securian and that vendor. I don't like the title of this, but things that you should consider: pros, cons, advantages, disadvantage. And I'll put the caveat out there that everybody's situation is different. This may be a good thing for you to consider. It may not be. So keep that in consideration. But advantages by doing this is that it eliminates the need for you to pay directly the premiums to your health carrier or long-term carrier. If your health premiums aren't being paid to your carrier from your annuity, that will stop, and you would get that annuity directly to you. Some disadvantages is the obvious here is that you give up your death benefit. So the beneficiaries upon your death would not get the full amount of your face value. If you use all that money to pay for your health insurance or long-term care, that money is used up and it's gone as a death benefit. The election is permanent, so you can't decide to do it this year and then next year say, well, that wasn't a good idea. My situation has changed. It's a permanent situation, so it cannot, once you apply and it's enacted, implemented, you cannot revoke that choice. So how do you convert? First, you have to meet the eligibility requirements. Then you contact ETF and request form number 2324. And what that will do, that will show you what the face value and the estimated present value values are. You will complete the application, which will be accompanied with that form, return it to ETF, and then the election will take effect. There's a period of processing. So it will take effect on the first day of the third month after ETF receives your application. So if you were to send it in today, it would be March, April, May 1st. Did I do that math right? No. June 1st, say. That's why I'm not teaching math. So the administration, just a little bit about, the behind the scenes to give you some knowledge about that is when you file, a valid election form, ETF will stop health insurance premium payments from your annuity, as I mentioned earlier, or via direct billing in the appropriate month. While your account is open, Securian will adjust your premiums as needed to reflect any changes in your family status. So if you have a spouse that passes away mid-month or during the course of this, Securian will take care of that after the notification from ETF and Securian. You will be notified on an annual basis of what the balance is left in your account. And when you have 4 months of premium left of monies in your account, Securian will notify you, they'll notify ETF, and they'll notify your health carrier or your long-term care insurance. And then ETF will arrange to resume your health premium payments from your annuity at that point. A note here is if you elect to have your long-term care insurance covered, it's your responsibility to notify your long-term care carrier. ETF and Securian will only notify your health carrier. And conversions will not change your health or long-term care coverage. So your benefits won't change. Everything will remain the same in that regard. It's just how those vendors, those carriers get the monies. So that's all that I have about long-term care and health insurance conversion. These are just some additional slides to talk about sick leave, resources about sick leave credit conversion, some links. I know you guys will get copies of the slide deck in a week or so.
It'll be up on the website.
Okay, it's up on the website or will be. So these are just some resources that will be of use, of value to you if you want to learn more about the sick leave credit conversion, programs like that, video handout, and converting to life insurance to pay for health premiums.
Tom, could you give an example of what a typical amount of money this might amount to? So we get some idea, does this cover your health insurance for a year, 6 months, or 3 years?
There's a lot of variables to that. Who's your insurance carrier, what coverage you have, how much money you have in your life insurance balance. So to put a number on that, no. It would really depend on too many variables to give you a number. I'm guessing to do a survey here, there's a wide variety of what annual earnings would have been during the active career and different policies that folks are on, what their premiums are. And then if you elect to do health insurance versus long-term care, that would matter as well.
Another question, and I don't know if you can answer this yet, or if it's public information yet, but we were told last year that the health insurance, the Medicare Advantage program was going out for bid. And in February, that was going to be decided.
Mm-hmm.
Are you at liberty to tell us where that's at?
I am, but I would rather turn that question over to my distinguished birthday gal, Arlene, but you are absolutely correct. But yeah, she'll be able to share that.
Don't walk through the words. Okay. Hi, so I'm Arlene Larson. I am the program manager for the Medicare Advantage plan and also the Medicare Plus plan. That's the Medicare supplement that you can also choose from as a retiree. We did indeed go out to bid for both of those products, and United Healthcare won the bid again for both of them. It was a competitive bid. We got several vendors to bid on it. But after evaluating it, it was deemed that they had the best rates and the best offering available. So it's going to continue to be UHC for both of those.
It's a great memory, Bill. If you remember that from last year.
There's a couple of Zoom questions here. I think they're pretty simple. How can I learn the present value of my life insurance? Talk to ETF, correct?
Yep. They would have to go to ETF and request a specific form number that I can give you real quick. I can go back in the slides. 2324. So they can
Okay.
contact ETF. The call center, general numbers open from 7 to 5, Monday through Friday.
Next question is weighing between using accumulated sick leave and life insurance. That's a pretty personal decision. Do you have any advice on that?
Steve?
Please use the mic.
Up here, and I'm short, so. No, when you say, hey, use the life insurance or use the accumulated sick leave, you're always going to use the accumulated sick leave first, okay? Why? Because honestly, you can't tap into this until that sick leave is basically exhausted. And there's a reason why we do this. We don't let you change over this life insurance till frankly as late as possible. Because honestly, the older you are when you switch it over, you're going to get a better conversion factor. So that's why as long as you have other things in place, we're going to use all that first. And then when you're down to about 3 months of sick leave, or you got to be within that last year, I believe, then you can start getting an estimate on using it. But you really want to tap out the other first.
So in other words, there is no choice. You have to use sick leave first.
Right. And it's for your own benefit.
Yep.
It really is.
If you're having your insurance paid for out of the converted life insurance, and you happen to die, does that money continue to your spouse?
Yeah.
So it's exactly the same as if it were in the actual sick leave fund.
Right, yeah. So any money, if you pass away before the money's exhausted, you would get that balance. So, but you wouldn't get the difference between the converted amount versus your true value.
What happens, I guess my question would be, what happens if you have a sick leave account and your wife also has a sick leave account and one of you passes away? What happens to those two balances? Does one go away because the person died?
The good news, if you either have your sick leave banked away, or if you're currently running family coverage, if either one of you pass on, the other one can use the other sick leave, okay? The only time you'd really run into an issue is if the two of you each decide to carry a single policy. Because the only time if you're running a single policy and you pass on, then that spouse would not be able to use the sick leave. But it's all protected as long as you're carrying family, and whether you pass on first or that spouse who has theirs currently banked away because you both have a sick leave bank, completely protected unless you run two singles.
Another question. Can you switch during open enrollment and not use your accumulated leave for a year or two and then go back into it during open enrollment in subsequent years? I don't know why you do this, but somebody asked it.
Sure, Steve's coming up.
Just hang out up here for a while. Okay, back to the question a little bit here. As far as, let me hear it one more time.
Okay, can you switch back and forth from paying for state insurance out of pocket and buying private for a year or two?
Well, first of all, if you have the sick leave credits, frankly, you might as well use them. Okay, because they're monopoly money. You can't cash them in for anything. You can't do anything else. You're going to run them as long as they can go. Okay. Now, if you have the opportunity, like, let's say you're getting coverage because you took a job now in the private sector, of course, you're going to want to turn around and escrow or bank away those sick leave credits. Okay. And then when that other coverage ends down the road, can you come back and tap back into it? Absolutely. The key thing is to escrow those sick leave credits. To stop them and keep them, you have to have comparable coverage. They won't let you just say, you know what, I'm fairly young, I feel pretty healthy, I'm going to let this thing roll a couple of years. No, you have to have coverage. It doesn't have to be exactly as good as ours, but you got to have comparable coverage in order to bank it away and stop using it.
The comparable coverage, that's true, that's like the main factor, right? Regardless of the circumstance. Say somebody like moved and said, I need this doctor in this area. So they picked up insurance down there and then they came back because they moved back and they're healthy.
Right. And keep in mind, moving out of the service area also lets you pick a new provider and things like that as well. But yeah, as long as you have a legitimate reason and you have other comparable coverage, and if you're really unsure if this other coverage is going to fly or not, you can run it by ETF ahead of time. Turn into us a little in advance of when you need to do this. And they can actually take a peek at it and make sure it is good coverage that qualifies.
So stay close by. We're gonna slowly transition into Adam here shortly for his comments on health insurance. But I guess one of the questions that people may have is sick leave coverage runs out, and I can continue having that deducted from my pension if I want to continue that particular health insurance. But maybe I decide, it's $1,000 a month or whatever, that maybe I need to go out and see if there's something similar coverage that's less money. Do you want to speak to the pros and cons of whether you stay with the state and their program? What are the advantages of that versus going out into the marketplace?
Okay, first things first, like we mentioned a little earlier, if you still got sick leave credits, I'm of the opinion you might as well use them. Again, monopoly money. You can't cash them out. And as long as, let's say you're even eligible for Medicare, you have your Medicare Part B, as long as you have us and Medicare Part B, you don't need to buy a Medicare supplement. Okay, so run those sick leave credits as long as they'll go. If and when those sick leave credits run out, when you're about 3 months out from running out of sick leave credits, they're going to send you a letter, basically asking you, what do you want us to do? Because if you don't tell us otherwise and sick leave runs out, our default is we assume you want to keep the coverage and we're going to start pulling that premium out of your retirement check. Okay, so we give you a heads up on it. As far as whether to get out or not, some of it comes down to dollars. I'll be honest. You can probably find maybe something cheaper out in the marketplace, or if you're on Medicare already, you might be able to buy a Medicare supplement cheaper than to keep because remember, ours isn't a Medicare supplement, it's full insurance. Okay. On the other hand, you kind of weigh the things of, you've also been on the UW policy for a long time. You're used to that coverage. You might decide it's worth it to pay more than what maybe a Medicare supplement might cost because you're used to that coverage. So it really is a personal decision. However, if you do decide to drop it and say, you know what, I'm going to go with my Part B, we're going to go out in the marketplace, get a supplement. And then you decide down the road, I hate this. I'd rather pay the extra money. I should have just stayed put. You might have to wait till open enrollment to get back in, but you could pick it back up and come back in. As long as you're a state employee or UW employee and you're willing to pay the premium, Like I said, you might have to wait to open enrollment to get back in, but you could jump back in the health plan if you decide this didn't work for me.
Continuing on, let's say I get a diagnosis of terminal cancer and it's 2 years or something. Does your health state affect any of these decisions?
No, there's no pre-existing conditions. We've never had that. So yeah, could you still get back in? Sure. Although then that ties back to us talking about life insurance and living benefits and all that, but that's a whole other subject.
I do have one question that has come up, and that's if you run out of sick leave credits and now you're on your own, you're going to end up paying the premium by yourself or whatever. What are the benefits to buying health insurance through the state, through ETF, as opposed to going out on the exchange or whatever? I mean, here we're in essentially a big group policy with whatever vendor we choose. But if you go out on your own, you're really an individual policy unless you work somewhere. So could you talk a little bit about the benefits, if there are any, to participating in the state ETF program as opposed to going out on your own?
I would say, and I'm going to get a little bit into personal opinion here, okay? There's a little aspect of you get what you pay for, you know? So again, sick leave credits, easy call. You run them as far as they'll go. No reason to be paying for a Medicare supplement when you have sick leave credits, okay? But it is a personal choice at that point when that sick leave runs out. Because my guess is, could you find a Medicare supplement cheaper in the marketplace? I expect you could, but it depends. You know, there's a little aspect of you get what you pay for too. On the other hand, ours is really, even if we call it a Medicare Advantage plan or Medicare Plus, it's really not a Medicare supplement per se. Because remember, you're still getting your prescription drugs with, say, Medicare Advantage plan. If it's something Medicare doesn't cover, but our health plan covers it, then it's still covered. Whereas with Medicare supplements, basically, if it's not something Medicare covers, then they wouldn't cover it either. So personal preference depends on your situation. It also comes down to dollars and cents, to be really honest.
I'm thinking actually of a slightly different aspect, and that's that you read all the time about problems with, for example, Medicare Advantage programs. I mean, UHC has been in a lot of trouble because they've had a lot of problems, but we don't seem to see them here in the state. So any of the insurance programs, whether it's Dean Care, Quartz, whatever, does ETF have built-in protections for the members that are not available if you go out and buy something on your own?
Yes, we are and I come from the pharmacy and the medical standpoint. We're a big player. I mean, we go out to bid. They have to adhere to our standards. We go through and do the reporting. They have to, you know, they're invested in us, whereas out in the market, like you said, you're one person kind of going it alone. I will tell you from a pharmacy standpoint, our pharmacy benefit is very rich. There's no deductibles. It's low out of pocket. You don't pay more than $50 for a drug unless you take a tier 3 non-preferred drug. Then it's a cap of $150. I hear, you know, when you read papers too about people who go to get drugs and they're paying thousands of dollars for their drugs, and drugs are expensive, but you're not going to pay more than $50 for under ours unless you go for a non-preferred. But a tier 1, a tier 2, and a tier 4 drug, specialty drugs that cost hundreds of thousands of dollars, you're going to pay $50 for. We have a very good pharmacy benefit, and I bet you Arlene can talk more about the medical benefit.
Yeah, and so just to reiterate, your coverage with us includes your Medicare Part D. That's what she's talking about. And so that's already wrapped into your premium. So your premium is paying for both your medical side and your drug side. Comparing our Medicare Advantage plan to the ones that you're going to see out there. So ours is a group national passive PPO. And what that means is that you can see any provider in the United States or any provider in, you know, the territories, the Virgin Islands, you name it. And that will be covered at the in-network level of benefit as long as that provider works with Medicare. A lot of the Medicare Advantage plans that you'll see on TV are actually, they're almost like an HMO. They have a limited provider network. They may kick in a whole bunch of, you can get food, you can get rent, we'll pay your Part B, but you need to look at the provider network and the benefits. The benefits you get with us are the same with Medicare Advantage as they are for all the HMOs. They all offer uniform benefits. The difference is our Medicare Plus supplement plan that has slightly different benefits. If Medicare pays, it pays almost 99% of the time, very few exceptions. But uniform benefits that you had as an employee that you're used to now, that's the same in our Medicare Advantage plan. Okay.
I spent hours on the phone with Navitus, Walgreens, trying to get a prior authorization through for a drug that I take. How long are we locked in with Navitus? Because I thought they were good. Is that like a multi-year contract for prescriptions?
Funny you should ask. So we just went out to RFP actually at the same time for MA. We went out for our pharmacy benefit, both our commercial benefit and our Medicare Part D benefit. At the January 15th board meeting, the group insurance board voted to go out to our contract that expires the end of this year to issue another 9-year contract with Navitus. I will tell you that we had multiple bidders. Navitus came through as the best. They're based here in Wisconsin, which is always nice. They've been good to work with. If you have a prior authorization, a good way to do a prior authorization, if you need it quickly, you fill out the paperwork, have your doctor fill out the paperwork. You shouldn't fill out the paperwork, your doctor does. Whenever you do a prior authorization, they send it to a doctor to look at. So doctors talking doctor to each other. If you mark it as an emergency, they have 72 hours to do it. So it accelerates it if you need the drug quickly. So
I was a week late getting it filled.
I'll talk to you about that because I think
Yeah.
I know which one you're talking about, and I
Yeah.
think they're paying a penalty because of that. But so, but yes, so we're ready. We haven't signed the new contract yet. We're still negotiating, but we're gonna be with Navitus now for a number of years.
Another question from the Zoom. It's a husband and wife, both have accumulated sick. They're using the one of the spouses. Will it automatically switch to the other spouse when the first spouse's leave is used up?
The short answer, yes. Okay.
But there might be a long answer?
No,
Okay.
there really isn't.
It's an automatic conversion.
Right.
Okay.
Right. We're going to use, let's say she's the one run, we're going to use hers up first. When that runs out, we're going to automatically switch over to the spouse. And then when both are used up is when we start saying, okay, what do you want us to do? So she's perfectly good till that second sick leave bank runs out.
And somebody wanted to know about pre-existing conditions. Is that in writing someplace on the website? They would like access to verify that.
Yes, I think it's in multiple places on our website. I think if you look at the schedule of benefits, it's on that. And if you call ETF, they will tell you. So it's in a lot
Well,
of places.
Telling and writing are different
Yep,
things.
but you go to our website, the schedule of benefits, if you put it in the search thing, it'll bring up the schedule of benefits. It'll be in there.
Okay.
Okay, so to summarize, I think some of these last few questions, it kind of has to be a decision you make when your sick leave runs out, because we don't know in advance what kind of contracts the state's going to have for both pharmacy and for medical insurance benefits. We hope it'll continue to be good, but that's an unknown factor. So I think you have to reassess this at that point of your life to determine whether you want to continue with the state coverage or whether you should look elsewhere. I think one of the compelling reasons right now is the Navitus program, at least in my mind, that drug coverage program is probably superior to anything we can find out in the marketplace right now. But I'm going to introduce Adam Van Spankeren to talk a little bit about the marketplace and the insurance industry in general. He's got a few slides here. We'll get those set up. But Adam is with Extension, division of UW-Madison and works as a kind of a navigator of the health insurance program. So I'm going to just turn it over to him at this point.
Not even kind of, that's my actual title, navigator. I don't even know if you guys want me. You should probably want the mic.
Okay. Great. Awesome. We'll wait while he sets that up. I was like, I don't even know if you want me. I would want Arlene at this point. Okay, cool. We'll wait while he pulls that up. Yeah, my title is Navigator Program Manager. I'm with Covering Wisconsin. We can get some of these introductions out of the way. We are part of the Health and Wellbeing Institute. I think some of the questions that you guys were getting were starting to kind of cross over into like my territory, which is really fun. I was getting really excited, but I was like, yeah, that's the right answer. And but yeah, we do have a really full house here. With somebody, you said there were 50 smiling faces. I was like, there's no way there's 50 people behind me, but I didn't turn around. But yeah, so a quick question while we have you guys and you have a whole panel and it's just me. You mentioned when you run out of the sick leave, right? I was thinking running out of sick leave, you can convert it you can convert the life insurance, that can pay for it. I wanted to double check. You said you might not have a special enrollment period to go to the broader market. That my understanding in theory is unless your spouse is also, you're using theirs as well and you're on family coverage, they wouldn't have a special enrollment period. Right? Okay. I just want to confirm that. Okay. That I just want to be very clear because that was an answer that I would want if I were in that position. Okay. So that's one thing. I talk more about I talk about the Affordable Care Act as a big thing. I mean, you guys could grill me on that all day, all night. I've been actually, doing ACA stuff since they rolled it out. But I am a navigator and we don't talk about Medicare. So that's like the one big gap. And it's not that I don't want to, it's that legally, it's not what my license covers. And I can't give you guys any bad information. Like that would just be, so like, that's where I go, Arlene, I'm so happy to meet you today. But there's a lot of health insurance ins and outs, a lot of things you should know, a lot of things I want to warn you guys about while you're shopping for your insurance. And I think we can cover quite a lot. And like my esteemed colleagues were saying before, if we just get into some really good Q&A, like I'd be super happy. Like if you guys have specific questions and I can answer them, then that's a good use of everybody's time.
On my computer,
It's being stuck.
but not up there.
Yeah.
Maybe I could touch.
We'll see. Yeah, I actually, most of the time, I'm happy for a couple technical issues because it like lightens the room up a little bit, it makes me more comfortable. Everyone's used to that. At least that's what I was thinking when you were having them. Now that I'm having them, I'm like, nah, no, I changed my mind.
I do have a Medicare question to fill the void here.
Please.
And I think I know the answer, but somebody is saying, what happens to the cost of the plan when UW health coverage person gets Medicare, but the spouse is not yet of Medicare age? I mean, they're different prices.
Yeah, so what you become, this is way too tall. Okay, let's do this. Hello? Okay. So when you're on a family contract as a retiree and you cover yourself and your spouse and let's say one of you is 65 and one of you is not, you become what we call a Medicare split or a Medicare sum contract where some of you are on Medicare and some of you are not. And so then the person with Medicare, their coverage actually gets better than the person without the Medicare coverage. As a person who doesn't have Medicare, I've got a $250 deductible. I've got a $15 office visit copay. When you hit Medicare and you get Part A and Part B, then you have no deductible anymore. You have no copays except for emergency room. And you've got a durable medical equipment coinsurance, 20% up to $500 per person per year, which is a really good benefit. Your rates go down when one of you becomes Medicare eligible because Medicare is going to be picking up basically 80% of your medical and about 50% of your drug. Navitus covers about 50% of it. So that's why the rates go down, even though your benefits go up. That takes care of it. And then, also when you leave us, one of the slides that Tricia shared is the Medigap helpline. And I do encourage you, if you've got questions about Medicare supplements and other Medicare Advantage plans, the Medigap helpline is a great resource that's run by the Board on Aging and Long-Term Care. So they're great to call.
Nope. This is for the home audience.
Okay. I have a question, general the Medicare Plus, the supplement. I was under the impression that after the Affordable Care Act, that it did away with the problem of pre-existing conditions and insurance companies denying you because you had a specific condition. Well, I think it was about 5 years ago, WPS was advertising their supplement. And even though at the time we were still getting it through the state and were retired, I thought, well, I'll just fill out the form and see what they say. So I filled it out as if I was interested in the Medicare Plus or supplemental insurance. And I got a call from them. They received that and got a call and they said, we can't take you. I happen to have rheumatoid arthritis. And they said, we don't take anyone with a autoimmune condition. And I said, well, I'm not on a biologic or anything like that, not any expensive drugs. And they said that doesn't matter. We don't take anyone for our Medicare supplement with an autoimmune condition. And so I wondered, was that legal, or does the pre-existing, doing away with the pre-existing condition test, is that only with policies on the ACA? And can you talk about that? Is that still allowed?
So I have a theory. A lot of times you'll see people selling plans that look and they walk and talk like health insurance that should be protected, like an ACA plan or like Medicare or something. And the idea is to be competitive and to look like those things and then compete with those things. But then when you go to use them, they don't have the same protections. So I'm wondering if they called their plan, and even this would be fraud, and it might very well have been, and I will talk quite a bit about fraud later if you guys let me. They said, oh, you're not eligible for our Advantage plan. And they might have just said, this is our Advantage plan, and said, you have a pre-existing condition, because those types of plans don't have those protections, which is what I'm guessing happened, something that I see too often. Does that sound plausible?
And I would add to that too. So what you're speaking about is a program that was marketed by WPS outside of the group health insurance program, not outside of ETF. We do not have pre-X. The Affordable Care Act, you are right. They changed the law so that if you are in a marketplace plan, if you are not Medicare, they can't do pre-X. However, the Affordable Care Act did not specifically speak to that Medicare piece. So I think that legally they could do that. But if they were in the marketplace, they could not.
Right. If they're in the marketplace, or if they sold something, anything you can find on the marketplace, like we'll talk about the distinction between, we've been talking about marketplace. When I say marketplace, typically I'm saying ACA, Obamacare, marketplace, that's all the same marketplace versus just the market at large. Anything you can find on the marketplace, you should be able to buy directly from a health insurer. It sounds like this might even be in a little bit of gray area kind of between the two, where it's like they find a niche and they say this is a specific type of plan, or this is a Medicare plan that's not in the marketplace, or it's grandfathered and it doesn't get all those protections. So if they found a way, I see less of that now, but there's other fraud going on that I'll talk about in a bit, which is disheartening, but I want you guys to be safe and protected from it. So we'll get into it. It's a great question though. We got to do intro already, so fortunately we're not wasting time. I'm not in the business of wasting anybody's time. Do an introduction to Covering Wisconsin so you guys know what my organization is and what we're all about. We'll do an overview of just health insurance. I think we'll fly through some of that just because you guys know, I think, quite a bit at this point, having lived it. We'll talk about some options for you. And even if some of the stuff that I talk about that my organization specializes in as navigators might not be relevant for you, it could be something that you're helping a family member with, or that you encounter, or that you're a caretaker. Anything like that could still be relevant for you. But then we'll get to the tools and referrals, but really the Q&A at the end. Anything that's still relevant, unanswered. We have a great group here. This is a highly knowledgeable crew of people, and we want to make sure you're getting your money's worth. How much did this cost again? Okay. So covering Wisconsin, we are grant funded. Contract funded, yes, but mostly grant funded, federal and state funded. And I mean, even the state funds, come through, or the state funds we get are also federal funds. So just think about what that means these days. We have health insurance navigators. Navigator is actually a federal title. It's part of the ACA. Somebody looked at the Affordable Care Act and said, this is super complicated, and there should be people out there who do promotions for health insurance, not specific plans, but just for the idea of it, who educate people, who say, hey, we're here to help. That's what a navigator is. That's what our title is all about. And that's what that last bullet is, the education, the outreach, and promotions. We are out there saying, hey, the marketplace is open. These are the deadlines. We're here. We can help guide you through the application process. And we'll talk about the different types of assisters and how we're different in just a sec here. So we help you understand your health insurance options. We'll help you find plans and financial help, especially through the marketplace, the financial help. It's built right in. So when we say marketplace, that's what we're talking about, is that website, healthcare.gov, because that's where those subsidies, those tax credits are baked right into the programming there. We can sign people up for healthcare.gov and for Badger Care Plus or Medicaid. Most of the time, people use Medicaid and Badger Care Plus interchangeably, but many of you may or may not be aware, it usually just takes having yourself or one loved one in the family to know just how complex Medicaid is. There's just a host of different programs that you may or may not end up touching at some point in your life. We help people with billing and coverage problems. If you encounter just something really challenging and you don't know where to turn, Navigator is a good place to start. Like, it might not be our bread and butter, but we're always happy to help. We make great referrals. I mean, we like to be the last place people stop, but if it is outside our wheelhouse, we will get you to someone trusted, and we'll talk about why that's so important a little bit. And then there are some community programs to help pay for insurance or medical care. I mean, not community programs, but that's what we've been talking about all day today. But through the marketplace, there are certain premium assistance programs, things like that, especially here in Dane County. So things that work well with healthcare.gov. So just an idea of our service area. We are statewide. I'm here in Madison. I've been in Madison since college. But these are all of our subcontracts where we have navigators, again, people who share my same title, people who go out into the community, do this outreach, do this promotion, and then help enroll people. We've had record-breaking numbers for ACA signups this last open enrollment period. And these are where our navigators are that do this incredible work. We do a lot of our work over the phone, telephonically or over Zoom. I miss the in-person days. I really do. That's where we do our best education. I'm really happy to be here, if you guys can't tell. I miss the in-person stuff quite a lot. There are other types of assisters. So you might, be going, oh man, I was at Adam, he did that second part of that presentation last week, and I wanted to talk to, I don't remember their title. You're looking up how you can get assistance. There are other types of assisters out there, but it's really important that you know who you're dealing with. So there are navigators. There are what's called certified application counselors. Certified application counselors get the same training as navigators. The application part should be identical. We, in fact, train a lot of them. I train them, when we do our annual conference every year. They're really great. They've been doing this work as long as I have in some cases, but they don't do the outreach and they don't spend as much time on education, but they still know their stuff. The last piece is going to be agents and brokers, and they make up the kind of the third piece of this, this trifecta. And that's where I want to warn people. I will say there are excellent agents and brokers. There are, and I think you guys must know that too. You guys may have your own agents and brokers that you really like, and they do a great job for you. But there are today, more than ever, more bad actors out there than ever, because policy changes so fast, And every year during open enrollment, or we just had what was called the Medicaid unwinding, where COVID created a unique opportunity for scammers to take advantage of people who were enrolled in Medicaid for some cases 3 or more years, and then they needed to do something, and all they knew was they needed to do something. And then the laws also changed within the last 5 years where people could sell marketplace insurance across state lines. So suddenly you're getting calls from out of state, someone saying, I'm an agent, I'm great, I'll help you. And everything they tell you sounds awesome because that's what they do. Everything a navigator tells you won't sound awesome. Sometimes it's stressful. And that's how you know we're telling you the truth. But these agents, they can be really disreputable. I'll talk about how to spot them and what to look for a little bit later. We can focus on that. But I just want you guys to know that it's a problem right now, and we are seeing fraudulent enrollments at such a rate that I talked to a call center representative at Marketplace, and she said that 70% of the cases she's touching have some element of fraud on them, which is, it blew me away. Like, and I told our project officer that. I was just like, that is way, way too high. And usually, just a real shorthand. I was saying this to people even before I knew like what the future was going to hold. But if you're talking to somebody and they won't tell you where they are, just hang out. If you're talking to somebody, it's the fastest way to identify a bad agent. Where are you? In Wausau? Great. Okay, cool. I'm glad, my cousin goes to school. We're up there, and that's awesome. If they're cagey at all about anything like that, just hang up. Find somebody else. All right. So just our funding, I talked a little bit about this. Our federal, state, local government agencies, grants, some admin dollars from UW. I don't know where those dollars go. Printing, maybe. Not enough of them. No. But then we do get some help for our annual conference. But we don't get the thing that a difference is. So an agent is going to get a commission from health plans when they sign you up. That's their financial apparatus. Whereas a navigator, it's the federal funding that allows us to be completely objective and unbiased. So just a health insurance overview. I don't think I'm going to spend any time on why health insurance is important. I don't think you would really be here if you didn't think it was or know that it was. But really, I mean, your life story tells you just how important it is and how important it is to you, what you think of as health insurance, and how to spot those bad plans and things like that. We'll talk about just because it's complicated. Health insurance can be really difficult to understand. I always tell people, you didn't have health insurance class in high school. Most of you probably understand health insurance better than most because you had it and used it for a long time. Usually it's people who are very young who know nothing about it, and I'm excited if they're eager to learn. It's, my favorite consumers, and it's actually it's been bittersweet for me. A lot of them have turned 65 in the last, within the last 9 years that I started helping them. But we had this journey together where they learned a lot, and then they turn 65, they have to go on Medicare, and I stop helping them. But it is complicated, and that means that people don't always know what their options are, and that can have a big financial impact. Your choices matter. It's dollars and cents. Steve, that's what you said, right? Yeah, like that. So we'll talk about some options. We have really great how-to sheets. Our website is really easy to navigate. We're actually going to hopefully be putting that to the test soon and finding out put our money where our mouth is, so to speak, and find out just how easy to navigate that is. So maybe we'll reach out to you guys if we need focus group folks. I think that's a good idea, actually. But health insurance things depend on, your age, your income, if you're getting health insurance from a job. Everybody's situation is different, and everyone in your family can end up with a different option depending on the different combination of factors you have. Health insurance from a job, don't need to spend too much time here. Most of the conversation we've had today is kind of beyond this. I think there were some really interesting questions early starting to get to what happens if I go back to work. So if people have some of those Q&A type questions, I think those might be fascinating to get into. But just know that if you have job-based coverage, if you do go back to work, and maybe you're not of Medicare age yet, and you go back to work and you have job-based coverage and it's considered affordable, which is 9.02% of your gross monthly income right now. That's what the market considers affordable. Then you would not be able to go to the marketplace and get the savings, the tax credits. That's where the cutoff is. So if you have affordable employer insurance, that is what they want you to take. That otherwise the savings, taking advantage of the marketplace, not taking advantage in a negative way, but taking advantage of those cost savings is closed to you. But your family might qualify for the marketplace. If you went and you might need to be covered by your job, but your family could still go to the marketplace. There's Badger Care Plus. The main thing to know about Badger Care Plus, and we're going to talk about a few different Medicaid programs, none of them in great detail because this is just not that training. There's just, we don't have the time to make everybody Medicaid experts. There's just too much to it. The thing to know about Badger Care Plus Medicaid is that it's up to age 65, like a lot of these other programs. But there is no asset test. And I'm going to say asset test a lot in the next few slides. That's a really cool thing because assets, and we'll talk about what assets are, but Badger Care Plus just looks at your monthly income. It just looks at what you're making right now. So if you become, unemployed but don't qualify for unemployment, or it hasn't started yet, or your previous work didn't qualify you for unemployment, whatever it is, if your income suddenly drops drastically, you probably qualify for Badger Care Plus. Healthcare.gov. So this is where I'm saying marketplace. Somebody said exchange earlier. I don't hear enough of that anymore. So we got marketplace, healthcare.gov, the exchange. Also, you just hear people say ACA, Obamacare. It's got too many names, but they're all pretty much pointing you to the same thing. Financial help is based on income, and additional financial help has been available through 2025, or is available through 2025, and we really, really, really want that to be extended. That has helped people. It started as part of COVID relief. It's helped people more than I think anyone realizes. I mean, it's knocking off, I think, about $700 from premium prices for just on average across the year, but for lower income people, it's a lot more than that. And it's allowing people who are at higher income levels to save money when they otherwise wouldn't. Open enrollment period sign up is November 1st to January 15th. I would expect that to change this year. Under the previous Trump administration, it changed to December 15th. It probably, almost certainly will again. This fall be December 15th instead of January 15th. That's an apolitical statement because it was always meant to change at some point, but it became a political token when it started, when it was moved up to do that by 2 years. It was always supposed to be something that was rolled out gradually and people learned, okay, that's the new open enrollment period. Now it's just been a volleyball that's kind of batted back and forth. And then you can sign up during special circumstances. So consumer protections, essential health benefits. This is what the ACA did, just so people know. I like to think of this stuff, essential health benefits, as what you think of when you think of health insurance, right? You got your preventive care, your pediatric visits, the ER, your prescriptions, your ambulatory services, your labs. What happens if I have to go to the hospital, I'm hospitalized? There are 10 essential health benefits that make up what the ACA oops. It's like I've got my 3-year-old here with me. Enshrines as health insurance. So that's what those are. And Steve, you mentioned comparable coverage earlier. Can I ask you if that was based on just the minimum essential coverage standard? Is that what determines it, or is it really got to be comparable to what you guys have? It's got to be really close. Okay. Oop, grab a mic. Yeah. Yeah, you're fine.
Yes, it has to be close. I will tell you that I do the comparable coverage with Arlene, and we see a lot of people that go out in the marketplace and get a prescription drug coverage that has a really high deductible or possibly goes on senior care. In senior care, if you make a lot of money, you can still get on senior care, but your deductible is I believe it's like $90,000. It's quite high, which is not comparable to ours. Yeah. So it has to be, and we have no deductible. So like I said, our prescription drug plan is quite rich. We have low copays. So we see a lot of people that go out that don't check with us before they sign up for something, want to come back and get their escrowed sick leave. And we have to deny them because they haven't had comparable coverage. So that's what we see.
No, you're great. I'm super glad I asked because I had one thing in my head and then the answer was very different. So if you are thinking or your circumstances say, hey, maybe I should jump off of the state coverage and I know I can get back on, definitely ask. That's what the people are there for, right? Yeah, check ahead of time. Definitely check ahead of time. So I'm very glad I asked. Special enrollment periods for healthcare.gov. We talked a little bit about special enrollment periods. So if your sick leave runs out, you wouldn't necessarily be able to run out in the middle of the year to go get Medicare. So I think a good theme of this discussion is kind of advanced planning. And then, people can call up ETF and get the information they need theoretically whenever they want, right? Yeah, that's what I would do. I would bug you guys. Monday through Friday. No, yeah, not in the middle of the night. You can call the marketplace in the middle of the night if you want. I don't know why you would, but you can if you need to. But special enrollment periods typically happen. The main thing is losing insurance, right? So if you're losing other coverage, and again, in this case, it's 65 or less. These are pre-Medicare people. You could have a birth in the household, moving to a new county. But most of these are actually tied to a loss of health insurance either way. So is that comparable coverage question I was getting to? But this is just loss of anything that qualifies as minimum essential coverage. What you guys are talking about is like, it's got to be close. So Medicare, you guys know, 65 or older or receiving disability for 2 years or end-stage renal disease. Often confused with Medicaid. I'm sure even by people just speaking, even people who do this all the time and just slip up. I think it's good that we both had the Medigap helpline on our slides for help, as well as you guys had the ombudsman. You have an ETF ombudsman? Okay, great. So there's a really good resource there that you guys can turn to from the ETF folks slides as well. And then also the Aging Disability Resource Center is just a great resource because if they don't know where to, if they can't help you, they'll know where to send you, which is great. They're kind of like us that way. So just want to let you guys know, all these programs, when we talk about money, we're talking about the federal poverty level. So there's a calculation here. The main thing is not to try to remember the table. I don't, and you shouldn't. It's to know where to go for a resource. And if you type in to any, honestly, it's really great because if you go to any Google and you type in FPL calculator, the first one that comes up is ABC for Health's FPL calculator, and they're in Madison. They're I used to work there for 6 years, and they have an excellent FPL calculator. And you can type in your income or household's income, number of people in the household, how much you're making, and it'll spit out the percentage, and that'll help you determine, okay, what should I qualify for? What programs, what program standards am I under? So why does that matter? For something like the Medicare Savings Program. So if you happen to be of Medicare age, you can actually, if your income is low, your assets are low, qualify for a program that's going to help you pay for your Medicare premiums, and in some cases, deductibles, copays, coinsurance. So Medicare premium assistance, it's tied to the limits. The asset limits are tied to the Consumer Price Index and updated annually. We'll talk about at the end of this section what assets count. But it's made up of a bunch of different programs. So the qualified Medicare beneficiary, which these all have silly names that people say, but the QIMBY, which the individual must be entitled to Medicare Part A, Part B, and the income limit is 100% FPL. So you have to be low income. That is pretty low. It's not as low as it is in every state, but that is pretty darn low. The asset limit being $9,430 for a single individual, not much more than that for a married couple, but it pays pretty much everything after that. And then also, you could qualify if you're receiving SSI, if you're receiving that's supplemental security income. If you're receiving SSI, most Medicaid doors are open to you anyway. Or if you, the main other one on here is disabled adult child, you could qualify as a qualified Medicare beneficiary. So then there is SlimB and SlimB Plus as well. Very similar income levels. And the asset limits you'll see are exactly the same. For SlimB Plus, the individual is not enrolled in Medicaid at all, and Medicare pays Medicaid will then pay the Part B and Part B. Sorry, I heard someone say SlimB. Sorry, yeah, it's SlimB and SlimB Plus. Part B and D premiums. I'm not sure. I see a typo in here. Is what I got distracted by. And then last one of these Medicare savings programs are the qualified disabled and working individual one. You have to be 65, under 65, but disabled. And the individual must have lost premium free Part A as a result of returning to work. Again, with a return to work, it's a pretty low income limit. And then there's a very low asset limit as well. But talking about assets, asset does not include your primary home, doesn't include your personal car or personal household goods, but it does include a lot of things. The main thing they're going to do is they're going to check your accounts, right? When they're looking at your assets, they ask for bank statements. They ask for bank statements, and then if you have other things, I mean, what's going to be most relevant to this group might be retirement accounts. So a lot of these might not apply to you. They might be relevant to people in your extended family, though. Depending on the future of retirement accounts, they might be relevant someday. But if you multiple vehicles, things like that, anything beyond that first home, first vehicle. And then there are other long-term care programs. Somebody you mentioned senior care. Is the deductible for senior care really that high, or was it?
Don't take a lot of money, that's really low.
Yeah.
Because it lets anybody.
It lets anybody in. Okay, that's really helpful to know. So there are also long-term care programs that help if you are basically different levels of disability. You need help with daily needs or respite care, adult daycare, assisted living, and then they also most of them have case management. But person needs help at least 3 daily living tasks, such as personal care, making meals, taking medication, and they'll have a diagnosed disability. So they'll have a diagnosis from the Disability Determination Bureau, and it can be physical or mental. Yeah, that was or. So tips for avoiding scams. I just want to add on what I was talking about earlier because I think it's going to protect people, might be the most relevant thing you learn in the short term, because you might have a lot of questions. You might have taken notes today and go back and think you've got a pretty good handle on it and say, I'm going to look that up. And you want to stay away from bad websites. So really, really, really only go to the ones that people that you trust are pointing out to you. And when I say people you trust, I mean professionally, not people that, your family members might not point you to the right things. But if you got it from this presentation or from the UW Retirement Association, it's probably good. But when in doubt, Medicare.gov, healthcare.gov, access.wisconsin.gov, that .gov is doing a lot. It's doing a lot in terms of the credibility of that website and protecting you from scams and fraud. It's protecting your information as well. We help people file complaints with the Office of Commissioner of Insurance. And also, if you enter any of your information online, so first best tip, somebody calls you, ask them where they are. If they're at all cagey about it, hang up. Second best tip, if you enter any information online and start getting calls as a result of it, that's a bad actor. That is a bad actor. You should never be entering your information online and getting phone calls. That is not how any of this works. No good actor operates that way. And then looking out for short-term plans or junk plans. Now, this is where the little bit of the gray area gets into with your question, Miss, that we started with. There are things, they changed the definition not that long ago for short-term limited duration plans. So short-term means 364 days instead of a year. That means you get products, that's how you know you're outside the realm of health insurance, that look like health insurance. And there are agents that like to market them as, oh, you should add this on. You need this. If you break your leg, this is going to cover you. Or they'll have these awesome names, Anthem, Eagle, Gold, hospital coverage. You're like, oh, I need that. Sounds fantastic. But they're never great. They aren't full health insurance. And if you read the fine print, they're not good. And when talking about this population, what you guys are eligible for, typically these just going to be a bad idea, and you're not going to need them. I get even more than when I usually say that in a group. So just be aware. You can make complaints to the Office of Commissioner of Insurance if you feel that you've been defrauded or scammed. Scams can also sometimes qualify you for special enrollment periods, something to be aware of. If somebody took advantage of you or said, hey, you got to sign up for this, it's open enrollment, and you thought you were getting one thing and you didn't, that can later qualify you for special enrollment period. We do it all the time, actually. Shouldn't have to do it all the time, but we do it all the time. So you can report scams to the OCI or the Wisconsin Department of Agriculture, Trade, and Consumer Protection. And let's go through some tools and referrals quick. Some educational resources. Our website, again, really, really great, covering wi.org/learn. We have how-to sheets. We consumer test everything. We don't just let an AI tell us, yes, that's a good reading level. We really like human beings to say, yes, I understand this, or this is really hard, or this doesn't make sense. We also have caregiver resources there on the different programs, things people might be eligible for. We try to get them county specific. I don't know how up to date they are as of right now, if anything's changed, but generally we don't put anything up unless it's up to date. The Medicare resources, I just added these last night from an agent friend of mine who, if you're looking at the larger discussion on, hey, how do I get a Medicare supplement? You really should have a reputable agent like her come and speak to you. She actually does speak to retirement groups too. So Rich, maybe I could talk to you about her. But the Board on Aging Long-Term Care, great website, another.gov, Medicare.gov, tons and tons of resources there. I mean, you guys might know these really better than I do. The Medicare Rights Center was a new one to me. And then we have a sheet as well. It just has a brief overview of signing up for Medicare. Our website has a screening tool that will, if you're just trying to figure out who you or someone in your family might be eligible for, just put in some basic information about income, household size. And I know my colleague wanted me to make sure I mentioned the FPL calculator again. That's going to be really handy if you're trying to just determine eligibility. How to find us. If you go to our website and you're saying, I want to meet with an enrollment sister, I have to say this. Do not meet with us about Medicare. Not because I don't want to see you people, because I would love to, but we can't help you. That's the one thing. It's like, it's not what our license covers. I love talking about this stuff, and I love talking about health insurance generally, conceptually, in any way, shape, or form, but we can't enroll anybody in Medicare. So a navigator's not for that. But if you have people in your family, you're trying to say, hey, I have marketplace questions. I need to know some stuff about the ACA, what's going on with health insurance, Medicaid. I have any, if there's someone young in my family, anything like that, that's what a navigator's for. You can schedule right online through our website. We also have online web chat where you can talk to one of us, like an actual human being. And that's our main line. And then, I don't know how we're doing on time because I can't see the clock anymore, but questions or discussion?
Yes. Let's see if there are any questions either online. Yes.
A quick question, since we're all probably on Medicare here. If our accumulated leave runs out, you cannot assist us in finding a comparable plan if we're considering other ETFs?
Right.
Other than ETF?
It would be illegal for me to do so.
Okay.
How many people in this room get calls from Medicare? People trying to sell you Medicare supplement programs. How many have gotten a call? Raise your hand. Yeah, okay.
That's what I was feeling.
Yes,
But
we all get those.
call the Medigap helpline. He had it on our slide. We have it on our slide. They're also a state agency, the Board on Aging and Long-Term Care, and they can help you navigate whether it's a supplement or Medicare Advantage. So the Medigap helpline.
Yes. Yeah. It's going to be listed on the website. These slides will be posted on the Retirement Association's website. And that will be probably in a week or so, we'll have those up. We absolutely understand you weren't going to be able to take notes this fast, but rest assured the slides will all be there in the next week or so. And the video, yeah. So you'll be able to hear the presentation again if you want.
So the website.
You're good.
So the website is uwramadison.org. And you will find it under resources. There's a toolbar across the top. It says resources. If you hover over that, you'll have a drop down will happen and you will see presentations. If you click on that, you'll get to the handouts and a copy of the video.
I also want to caution you that if you simply type into Google UWRA, there's a good chance you'll end up at the University of Washington
Yes.
Retirement Association. So the Madison is very important.
Who has a question? Back, Karen. Talk into the mic.
Come to the mic.
I have a question for our panelists here on running out of sick leave. We as a organization are also interested in power of attorney. And a lot of things that happen are automatic here. And death might be easy, but when we go into memory care, what do our power of attorneys need to know? And can you talk to them? Because a lot of this information presumably is private. And so what do we let you know who our power of attorneys are, or what is the process?
Okay, right off the bat, you're absolutely right. Okay, because because of, HIPAA and other rules, we can't give your information away, so to speak. But if you do have power of attorney, we also have some forms for like releasing medical and also releasing non-medical information. So yeah, contact ETF if this is going to be coming into play. And then we kind of go from there, kind of what you need to get on file, whether it needs to be a medical one or a financial one, things like that. But yes, we have to have that on file to talk to, like, say if someone calls up, says they're your power of attorney, we're not just going to say, oh, great. They do have to send it in. But yeah, we can get it all set up for
Like,
you.
do you have forms that we can fill out like we fill out for?
Yeah, you'd have to get them off our website, or
Okay.
or if you don't really like dealing with that website, give the call center a call. They also, through the website, if you don't like phone calls, send it in as an email even. So, but yeah, we can get the forms out to you because it's a very good point. Towards when power of attorney comes into play, we definitely want that on file so we can get things done that
We
you
want
want
our
done.
health insurance paid even if we are in memory care.
Right, right. Well, the good news is, like I said, when the sick leave runs out, our default is we assume you want to keep it and we're just going to start pulling the premium. It's only if you
More
don't
than your
want that.
pension, that's what,
Yep, yep.
that's some of those little things.
And
we
remember what happens there, if your pension isn't big enough to cover it, then the health plan bills you directly. So like I said, as long as you're willing to pay the premium one way or another, we'll never kick you off the health plan, as long as you're willing to pay the premium one way or another. But you're right, power attorney is a great idea.
It's a very good point.
There's a Zoom question, or now there's two. Who at ETF can verify if a plan I am considering is the same as my ETF plan? So I will be allowed to return to ETF after leaving. Any idea of how long that will take?
So we only care if your plan is comparable if you're escrowing your sick leave. If you're leaving because you're running out of sick leave and you want to come back, we don't really care if you have comparable coverage. But if you're escrowing sick leave and you want to know, and you're going out and you want to know if it's comparable, contact ETF. Our call center will give you an email address, or you can email it to us and ask us to look at it. And then once you want to come back, if you're trying to unescrow your sick leave to pay for that, we want to see the coverage that you're leaving at that time to make sure that that is comparable to ours as well.
The other question, I'm still completely confused as to where I'd go to find another plan when my life insurance conversion runs out. I don't qualify for Medicaid. Apparently I can call Medigap, but as per the prior question, would that qualify for getting back to ETF's policy if need be?
Okay, so yes, if you're Medicare age and you are looking outside of our program, you want to call that Medigap helpline to find care elsewhere. Like Tricia said, if you're a state retiree and your sick leave is gone, you can leave our program and you can come back during open enrollment, or if you've got a life event, but open enrollment is the most common. It's all about the sick leave though. If you've got sick leave escrowed and you want to go elsewhere, when you want to come back, then we have to know that you've got comparable coverage. I hope that takes care of it. If not, ask the question again.
I think that would be it.
Any other questions from the live audience here? Otherwise, I think, oh, here we go.
I would estimate that there's some military veterans in the audience today. And I'm wondering if there's anything that you can share with us as to that being an option for coverage once our sick leave credits run out.
All right. Okay. So comparable coverage question?
Yeah.
Actually, you should take this one.
Sorry. So as a military veteran, you more than likely have TRICARE. TRICARE is always going to be comparable to ours because TRICARE is freaking fantastic and you've earned that. So if you have sick leave and you want to come back to ours and you've been on TRICARE, by all means, we will let you in, and that is comparable coverage. In fact, it's even laid out in our sick leave thing that says TRICARE is always comparable. It says that in black and white right there. So for military veterans, that's what that would work.
Any other questions? Otherwise, I think we'll conclude this session. Thanks for coming, and please fill out the evaluation forms, and let's thank our all of our panel people today.